They called it fringe. They called it odd. They called it a risk. But every major system change starts where people whisper, not where they shout. XRP was born in shadow zones of finance, quiet teams, technical roadmaps, and handshakes. Nobody televised. While headlines chased price, engineers and institutions sketched the rails that could actually move trillions, not tweets. You need to understand one simple fact right away. This isn't a story about hype. It's a story about infrastructure, about rails built for the scale the world quietly needs next. Here's a quick modern proof. Major banks and asset managers are now issuing tokenized money market products and experimenting with stablecoins on XRPL, using those rails to trade and lend in ways that were unimaginable 5 years ago. That shift from rumor to runway is the first clue that XRP's origin in the shadows wasn't failure. It was stealth preparation. If the world needed a secret option to move value faster and cheaper, would it advertise that option loudly? Or would it test it quietly until it worked? Think about that while we move forward. Let me be blunt. Bitcoin started the revolution, but Bitcoin solved a different set of problems. Trustless money, censorship resistance, scarcity. Priceless in 2009. But the global finance machine isn't built on scarcity alone. It's built on settlement, liquidity, compliance, velocity, and trust within regulated rails. Over the last 18 months, the game changed again. Ripple and related ecosystem players closed major strategic moves and attracted institutional capital at levels the market rarely imagined. A nearly $500 million strategic round, led by established financial firms, transformed a founder stage project into a deeply resourced infrastructure company. And that changes the playing field for builders and investors alike. Why does that matter? Because institutions don't invest like speculators. They invest to deploy and scale solutions that integrate with regulated markets. When that happens, the asset tied to the solution doesn't just benefit from sentiment, it benefits from use. More signals. XRPL has been upgraded with native credential and compliance features that enable on-chain identity and permissioning for institutional flows, moving the ledger from a hobbyist playground to a production-grade settlement rail. That amendment is live, and validators overwhelmingly supported it. A clear institutional product market fit milestone. Imagine the old rails as dial-up internet. XRP is not 5G hype. XRP is fiber with protocols written for banks. Now the real revelation. Tokenized assets and institutional settlement projects are not theoretical anymore. Global managers are tokenizing cash and securities, and the first movers are testing swaps and liquidity using XRPL and companion stablecoins. Not because of headlines, but because operational costs and settlement finality suddenly matter at scale. That movement creates a powerful structural demand vector for a neutral fast bridge asset. And that is the practical reason XRP is being chosen by enterprise builders as the rails come online. If the world keeps moving assets on-chain, what happens to the old liquidity webs that depended on multi-day settlement? We'll answer that and why it matters to your position in a moment. Here's the clear view you probably didn't get from the noise. Two forces are converging, and both favor infrastructure over narrative. Force 1, institutional adoption and capital, flows into infrastructure, not tweets. We're seeing entities preparing public and private vehicles that will hold XRP at scale, including new corporate treasuries and planned publicly listed vehicles that intend to accumulate XRP as part of balance sheet strategies. That's real demand formation, and some of those moves are already public. Force 2, regulatory and product maturity, ETFs, compliant features, and tokenization roadmaps that reduce frictions for big money to enter crypto markets. Several ETF filing developments have triggered formal SEC review windows. Those procedural steps alone can reshape retail to institution ratios and unlock regulated flows. What does that combination create for you, the investor? Urgency, yes, but also opportunity, structural, not speculative. If you hold XRP, you are positioned for infrastructure demand when tokenized markets expand. Bridge liquidity needs as institutions move between fiat, tokenized securities, and stable coins. Protocol-driven utility, where settlement speed and costs are the primary value drivers. If this activation happens while you're passive, you risk being late. Liquidity shocks and rapid price adjustments tend to favor holders already positioned on trusted rails. So what should you do next? Practical steps. 1. Educate. Focus on use case coverage rather than chart noise. 2. Secure. Use cold storage for the core. Regulated platforms for access and trading execution. 3. Monitor. Watch tokenization rollouts, ETF clock milestones, ledger upgrades, and major institutional filings. These are the real triggers for structural demand. When tokenized funds, real-world assets, and regulated ETFs hit simultaneous maturity, that's not a pump, it's a market regime shift. Do you want to be watching the replay or in position when the doors open? XRP's story is unusual because it started quietly, lived in the shadows of headlines, and now stands on the threshold of broad real-world purpose, born technical, built for speed, chosen by builders. If you came here for price predictions, this isn't your playlist. If you stayed for understanding, you're in the right place. One more important note, practical help for execution. Several platforms are offering targeted bonuses right now to jumpstart the accounts that will likely participate in the next phase of institutional flows. BTCC has an exclusive newcomer bonus program through the link in the description. Deposit-triggered rewards and trading credits that can offset early execution costs and help you get positioned faster. These offers are time-limited and designed to help new users start with extra capital to trade or stake. If you plan to move into the market during the upcoming activation phase, it's worth checking the bonus terms and deciding quickly if you want to see exactly how XRP's utility, tokenization signals, and those activation triggers connect to hard assets and long-term value. Watch the next video, The Hidden Connection Between Gold and XRP. That episode maps the ancient stores of value to the new rails and explains why certain assets act as anchors in times of regime change. Click it now and continue the chapter.